Gupta, Head-Equities at Deutsche Bank India joins us now to analyze all the cues for us. Pratik, hi, good morning. The consensus view up until now has been that India will outperform most of the global markets because of its own domestic cues, and we could be at higher levels by the end of the year compared to where we are now. Is that your view as well?
Yes, I think so. Good morning once again. I would just add that firstly, what the price action we're seeing today, you've got to put that in context to begin before we start getting into the longer term and mid-term forecasts. Heading into the Fed decision, we actually had a very low volume period last couple of days. We had a lot of shorts going out there. In fact, our futures desk was pointing out that on Wednesday, the level of shorts on the market, if you look at the Bank Nifty, the Nifty and the single stock futures, was almost at the same level as in August 2013. So obviously today we're seeing a lot of the short covering happen. On our pad, we're seeing short covering as well as some long only buying. But I think the bigger question in the near term is really what happens with China and the overall global emerging markets asset class. That's really where our concern is in the near term or the next month or two. And in fact, that's exactly the reason why the Fed has refrained from hiking rates. However, going back to your point, India, you're right, we remain very optimistic from a longer term perspective. We do think that the India story continues to attract a lot of foreign investment longer term. At Deutsche, we are seeing a lot of foreign investors coming in to visit India and doing their homework, getting their hands dirty in terms of which stocks to buy and so on. And generally, by and large, the feedback is quite positive. There is some disappointment on the pace of economic reforms in India, but by and large, there is near unanimity that we will see India doing better in the next year or so compared to the rest of the emerging markets. And the biggest worries right now relate to China. And in fact, our strategist has also taken a somewhat cautious view on India right now, given what's going on with the EM asset class right now. But let me just pause here and see if you have any further questions.
Yes, actually more than a pause, target suddenly on the Nifty. You know, we got one 9,000 will be taken very soon target. We got a 10,000 target from Ambit. Are you seeing any inflection in earnings at all? Any pickup on the ground?
Actually, no. I think on the contrary, we are still expecting more earnings downgrades now and in fact even after the September quarter. This is partly due to the impact of the sharp commodity price declines, which impacts the Indian commodity producers, some of the oil and gas companies. But conversely, it's also linked to the relatively low pace of investment activity in the economy. Whether you look at the capital goods companies or the banks, the banks are not seeing any pickup in credit growth as yet. Their margins are getting squeezed given the base rate cuts that are going on. On the capital goods companies, order inflows haven't really picked up. So I think on the contrary, we will continue to see more downgrades. But the question is, how much of it is in the price already? Our analysts, for example, are currently sitting at 14% earnings growth for this year, 18% earnings growth for next year for the Sensex. My own view is you'll see a little bit of a cut over there, but we also believe that a lot of it is kind of priced in as reflected in the sort of decline in the Sensex and the strong FI outflows we've seen so far.
So I take your point about the fact that, the bad news may have been priced in, but what makes you so optimistic on the upside for this market here on? Because we haven't seen any recovery in earnings whatsoever. Things on the macro front are improving, but at a very slow and steady pace. So what is the key positive trigger that could take the upsides for this market?
Well, actually, a couple of things between now and, say, over the next few months. First is obviously the RBI policy on September 29th. Our view is the RBI will cut rates given the way the inflation is coming down. We had the SBI chairman talking about earlier how food inflation hasn't really picked up in recent months. So one is the RBI policy move. Second is, I think, the continuing pickup in government capex. That's something which I think a lot of investors are beginning to appreciate, that gradually the government is picking up the baton. This will spread. Right now, so far, we've seen it mainly the road sector, but you'll see this spreading to railways, to defense, and other sectors as well. So the government sector pickup will actually follow through in terms of impact on the economy and on corporate earnings as well, although with a lag. And third is you may have a catalyst in the form of Bihar elections. If you have a strong win by the BJP, then that could once again, a lot of investors are expecting that would restore some confidence in the government's ability to push through reforms. and you may actually even get the GST cleared by December. But I would just add there are other smaller reforms which most foreign investors and our large domestic investors are watching. Things like the SEB reforms, such as the implementation of the land bills by the states, pickup in government capex, the coal auctions, those kinds of things are actually probably more important from a corporate earnings perspective rather than the headline, GST or the land bill as such.
In that case, would you be positive on something like a PSU banking sector?
Well, right now our preference still remains private banks. We think the PSU banks, clearly what the government is doing is great for the sector longer term. This is much needed reforms, the entire bank recapitalization program, the governance reforms they're talking about, but those things will take a very, very long time to play out in our view. So in the meanwhile, for the next year or so, you will continue to see the private banks take away market share from the public banks. They are better positioned, they are better capitalized as well. So we think the private banks will continue to do better.
Okay. You have a lot of auto stocks in your mid-cap list, so names like Apollo Tyres, Ashok Leyland, and from the frontliners, one of your top picks is Maruti. How much of the positives, like the impending rate cut, etc., are already in the price for some of these auto stocks? Because we haven't seen any great volume recovery just yet come through.
No, you're right that to some extent a lot of it is priced in already, which is why we don't have a very big overweight on the auto sector. But at the margin, this is at least one sector where there is decent earnings visibility compared to some of the other sectors like capital goods, oil and gas, metals, where we're actually continuously seeing earnings downgrades. So compared to that, on a relative basis, we are still relatively more positive on the auto sector versus some of the others. But I think as the economic activity picks up, as the government capex picks up, I think you will see a pickup in volumes and the earnings prospects for these companies. So that's why we still prefer this sector versus some of the other sectors out there.
Okay. Well, actually, the market seems to be either covering shorts or it is taking the finance minister's promise to disentangle the stressed sectors very seriously. Look at IDBI Bank, up 5.1%, has a lot of exposure to discoms and infrastructure plays. Axis Bank, not so much, but still some exposure to the bigger infra players. 4.7% up, Bank of Baroda 4.5% up, PNB up 4%, ICICI 3.7%. So all economy exposed sectors today seeing a pull up. Either taking the FM seriously or this is just a relief rally after, lying low for so long. Pratik, maybe we have to now cut in once again to the RBI governor. He's speaking about global growth, an area in which his expertise is given. Monetary policy will accommodate to the extent possible. What is the sense you have got and what does it mean as an investor? One cut, two cuts, and what does it mean for an investor?
Well, I think we're definitely expecting at least one cut, and after that I think a lot will depend on how the EM currency, especially what happens in China. In fact, I completely agree with what Governor Rajan is saying. India is being seen right now as one of the few countries globally, not just within the EM space, which has the ability to cut rates, which has a very strong macroeconomic outlook. So I think one cut is a given, but beyond that, whether we see more cuts this year itself, I think a lot will depend on how the Chinese currency plays out. If it stays stable, which is our house view, which is what the Chinese authorities are guiding, then I think we could be talking about another cut perhaps in the next policy meeting. But for the time being, our house view is you will see at least one cut in September itself.
Okay, so just to summarize for us then, what would be your year-end Sensex target and what are the stocks that one should be buying now, or rather that you would advise increasing the allocation to now?
See, our Sensex target for the year-end by a strategist is 28,000. As far as stocks is concerned, I can't comment on specific stocks, but in general what we're recommending is a relatively more cautious stance, a relatively more defensive stance in the short term for the next month or so till we get clarity on the EM currencies, till the currency outlook stabilizes. And beyond that, then we would get back into cyclicals. In the short term, for example, utilities is actually one of our biggest overweights in our model portfolio. But longer term, we would look back into getting into the domestic cyclicals, the banks, the capital goods companies, the cement companies, and so on. But near term, we are recommending a somewhat cautious stance for the time being.
All right, Pratik, we'll leave it at that. Thank you very much for joining us. Well, even a cautious stance is 28,000, so we have a distance to go from the current 26,000. And of course, we got much more bullish targets. The market's in a mood to factor in good news at this point in time, even from the FM, up 3% plus, 3.2 plus on the bank nifty and the mid caps as well. The laggards today are up 1.3%. Markets running for quality, but things might actually pick up even more as we head into afternoon trades. On a very positive note, we hand it over to Traders Only coming up for you in just a minute.